Alright. ECA, Toronto Stock Exchange, Encana, Corp. Secretwars, Stan Weinstein doing some more, getting hooked on the stage analysis. Really a strong framework overall. Makes you ride those stages as long as possible. The last 1 year, 2 years, 3 years, there's good chances you'll be in it. There's good chances that you'll be adding on the continuation breakouts or breakdowns. And you just keep riding the wave. It's awesome. And when those accumulation or distribution phases, stage 1s and 3s start popping up, then you're out. Either you hit a trendline violation, or you hit a sell stop, or a 30-week moving average. And usually that means the price action just slows down, reverses, or goes sideways for a while. And it's twofold. One, you lock in those profits, and you get to put that risk, that capital somewhere else, another stage 2, stage 4 that's just exploding. And two, you're just saving time. There's no use being stubborn and having pride and saying, if this thing goes to 30, I want to be in, and then, but you're there for years, so that dilutes your performance. I always tell people, let's say you make 100K a year, it's not 100K. You have to divide it by the number of hours you worked in the year, and that's your efficiency. If you work, you need 60 hours to do 100K, that's not as efficient as if you would need 40 hours a week to do that 100K. And always try to be efficient. And once you have the most efficient ratio, then it's a question of being consistent and reapplying it over and over. And that's about it. But to be consistent, you have to remove all emotions. Be truthful to your trading framework. And never take anything personal. That's the first capital sin of a trader. And right now what I'm seeing is a stage, odd number stage always follows an even number stage. Even number stage always follows an odd number stage, but not always in a sequential order, right? Stage 4, stage 1, stage 2, stage 3, stage 4, stage 1, and maybe beginning of stage 2 at the micro level. But it could have easily continued down to stage 4, So I'm just going to set alerts for Encana because I like it. 1750, this is the ultimate breakout. And here is the ultimate breakdown. The Ichimoku cloud, remember, for below it, the red cloud downtrend, for above green trend, uptrend. That's support. And when it starts flattening out and then just flipping from green to red to green, that's another very good sign that I'm in a stage 1 or 3. The ADX, which I'm going to use as a screener to find all these stage 1s and 3s. When it's below 20, that means the price action, the trend has really slowed down. So that is exactly where you want to be positioned. I'm going to add some orders. There you go. 1250 is another. And maybe 15. I'd say 16 right here. So these are the alerts. I could set thousands of alerts. I love it. I don't have to be super precise with them. Worst case, get triggered, come back to the chart and just readjust them. The chart morph, cancel that. And then I could have said, oh yeah, it's true. I put it too close. I didn't see that there was resistance further on. And these are not buy orders. These are just alerts. I have tons of them, ranging minimum 2 per any instrument I have on my TWS software for either the breakout or the breakdown levels. And sometimes I have 6, 5, 8, 12, and just intermediate levels or levels I think I see that might interest me. And there's nothing wrong with that. always revise, and rethink. So right now, this is what I like. I could imagine a stage 2 popping up here. All I would need is a break above 16 here with volume, or the stage 4 would break below 1250 with red volume. I know, again, I'm not using the Mansfield RSI, Mansfield indicator as Stan does, which compares the performance of the stock to its index. I just have the traditional RSI, which compares itself to itself. It's still giving me an indication of momentum or strength. I've noticed that when there's breakdowns, if I see the RSI going up and then I have a breakdown or stage 4 candle, I'm going to say, oof, something's wrong with that. So I'm using it like that. I called my TWS software support today, and they told me that they don't do custom indicators anymore. And yeah, so I'm stuck with that. Maybe I'm going to have to try to figure out maybe an overlay, use a MetaTrader and just use the feed from my interactive brokers for the API. So that's my plan B right now for that. So I don't have the A++ setups. I just have the A+ setups. I have A setups, but the RSI is going to be mine. Can't say it's Stan Weinstein, but I could say it's Patrick Karim additional confirmation. The ADX, we're just using it for my screeners purposes, and I have the Ichimoku Cloud for that additional confirmation. And the truest of truest confirmations is the monthly candle chart. And the levels on the monthly don't always coincide with the weekly or the dailies. Actually, they're usually tighter, closer to the actual price, because hold on, there you go. Because the candles, the wicks, that's the noise from the from a price action from the weekly, from the daily. There's wicks in there, closes in there. So the level right now, it just happens that it's pretty much the same at 1750, or just a little lower. But the breakdown, you see those wicks here? I put that line on the weekly candle chart at the closes and opens, excluding the wicks. But that's still too much noise for the monthly. The monthly, the lowest close it had was 1141 or 1150 instead of that $11 level from the weekly. So that's a truer support level. So what could happen is, if you don't recognize it and the price action starts going down, and you could, let's say you entered here, you'll have congestion at the monthly candles defined support. You'll have congestion there, or you have a chance of having it there. But if you're on the weekly chart, let's go back to the weekly chart. Let's say you're there, you go down, and that line is not there. Like that line I drew for that 1141, you just don't see it on the weekly chart as support that could interfere in your way. But it's there on the monthly chart for that longer pattern, so you have to recognize it. And look at that, 1, 2, 3, 4, 5, 6 alerts later, I'm still not in the trade. But that's my process. I do that all the time. Sell alerts, come back, sell alerts, come back, and find reasons not to enter the trade. Not good enough. Flush. Put more alerts. Okay, come back to me when you're more mature. Chart morphs. Come back to me when you're more mature. And eventually, it just you recognize the truest of charts that give you the best chances of reaching a profitability. And that's it for Encana, I think. The alerts are set. Let's hope for a candle on the upside right here. That'd be pretty cool. And on high volume, if we don't have it, we're going to wait for another candle to go even higher above that 750 on high volume. And if we have it, then we have a strong base. Plus, we're in a Stan Weinstein stage 2. Remember, Stan says that a good breakouts, stage 2s, they already had a 40 or 50% advance. And that's what we would be looking for right now. Building an advance, building the momentum. Hopefully the RSI is going to start going upwards. And maybe it's going to coincide with the, it will coincide with the ADX going above 20. Let's check a different last look. You see that nice base? If I'd be just doing my classical charting simple framework, noise reduced, this would be my level here. And I just look at Encana as a nice base with multiple targets. I'd have this target right here, which is my furthest away, least probable possible target. And then I'd have these, the closer the pattern to the breakout, the more probable it is of reaching it. The closer it is to the breakout line, the more probable it is to reaching it. And it could even be a smaller pattern here that could give a closer target. Patterns encompassed by patterns. This, you see this smaller, shorter target. It's below what I called a wall, previous support turned resistance. Here was resistance turned support. Support was tested, broken down. And now it's become resistance. And you see even like that's like three years old, even further. And on monthly candle charts really puts perspective, like support and resistance lasts a long time, periods wise. So if you look at the monthly candle chart for monthly candle patterns, then that resistance goes back and back. As you see it here. If you would have said, no, I just have a 5-year chart on the weekly, on the monthly candle, and then, or a 2-year chart, then you wouldn't have seen this. And guys on those daily charts of 1 year, well, they see pretty much nothing. They just see the current noise. So that's, you're at higher risks of getting whipsawed. And this bigger target, what I don't really like about it is that you have to go through this wall, this resistance here, then some more resistance here, going all through that area. But it does coincide with right on the good side of this bigger pattern, which created a lot of resistance because it was top pattern. Support got broken down of, and now that's a lot of resistance, and it gets there. So it's not that bad. It's well structured classically, and like I said, most systems they overlap. And on the Stan system, if you take any classical chart pattern, when it breaks out, the moving average goes up, follows it, and Stan, he looks less at the classical chart patterns, more at the moving average going up. But they all overlap. They both confirm the same thing, that you're in a breakout, and you're trending along towards higher targets in your direction, or lower targets if you're in a stage 4. All right, cool. Encana, man. That looks promising on the upside for now. And if ever the price action goes down, then we'll look at the other situation. I have no problem changing my mind. See ya.